It is great to have you back here at CoinSuri's channel. As a result of panic selling and FOMO, many people made poor decisions, like not having any exposure to the asset class or trading too rapidly in and out of holdings. That's all there is to it. You can change the outcome of the issue if you stop being so critical of yourself. Let it be known that you, the listeners, are the ones most likely to suffer a financial loss when it concerns investing. Maybe you're better able to rein in your feelings than the typical retail speculator. If so, I salute you. Fear of the market, though, is not novel. They stopped hitting me altogether. Still, I had that feeling a long time ago. I can say that I have been through that. Even yet, we cause chaos for ourselves. Additionally, we must determine if we will succeed in solving this problem. So, here's my take. In the 5 years or so that I've been hosting this YouTube channel, I've only brought it up a couple of times. However, there is something specific that I would want to mention right now. This is a turning moment in the market cycle, and we are about to enter the euphoria era. Furthermore, that is not guaranteed. However, the most reputable experts whose work I follow believe that we will most certainly have a wonderful time in the next months and beyond. Altcoins, XRP included, are supposedly leaving the accumulation zone. If this is true, then market activity will skyrocket. I have something important to tell you in this latest moon and blockchain update. Before I begin, let me state that neither I nor anyone I know has any background or expertise in the field of finance. Regardless of what I say, you should not invest in anything for fun and as a hobby. I enjoy making videos on cryptocurrencies on YouTube. I'm just an enthusiast. Next, let me tell you a story. I really should make more of an effort to discuss this, even if I have done so maybe twice or thrice on the channel. I think I may have casually brought it up more than that. Nevertheless, I haven't specifically addressed this in a large number of videos. I feel the need to reiterate how crucial this is. Because, well, most of the time, things turn out better when investors do nothing more than sit back and watch their money grow. Broad exposure to the asset class. In this instance, crypto is usually preferable than continuously entering and exiting positions, unless you're dealing with some absolute rubbish. The rationale behind this is that once these assets become live, you will either be exposed to the market or you won't. Additionally, if you jump into trading anything without first gaining market exposure, you should expect reduced gains, if not losses. This concept is valid in the world of stocks, and it is also valid in the world of cryptocurrency. This led to this happening, and this. I must confess that I have previously brought attention to this very presentation, which was developed by an unnamed individual. On the other hand, I merely happened upon it while browsing the web. This chart shows the performance of the S&P 500 index from 2007's end all the way through 2022's end. Everything I spoke with you yesterday on the concept is sound, and they still back me up on this. People are talking about the S&P 500 in particular. Although this is primarily a discussion of traditional stock market investing, the same logic applies to Crypto 100. Crypto. First and foremost. What I'm attempting to say is that when XRP goes live, you will either have exposure and be overjoyed, or you will have zero exposure. This led them to the conclusion that not timing stock market increases is the best way to profit from them. If you attempt to time your buying and sales perfectly, you can miss out on the biggest gains in the market. Along these same lines, the US stock market has shown remarkable resilience. In most cases, short-term losses in the stock market were soon recovered. Instances to increase over long periods of time. Their argument is something like this. I'm assuming most of you are aware of this, but it is relevant to cryptocurrency as well. In addition to that, new people are always showing up. When markets are down, though, that's when you should be ready to seize the opportunities. Second, you can get out what you put in, that is, sell the cheap things you bought here for a lot more money, if the market improves. So, they jot it down, and we'll be talking about September 2008. For those who are keeping tabs on what I'm talking about, this visual message is: despite the event's devastating impact, we emerged unscathed. The market crisis and recession that followed allegedly started with Lehman Brothers' bankruptcy in September 2008. Over the last year, the stock market has completely recovered. Hey, I survived this, you all. I was an adult when this happened, and I know you all did too if you're watching in 2023. People were really terrified as a result. So, can you imagine having to sell another one because people's mental health has worsened, their money has dropped, and it hurts? Oh, and I totally get that. In order to stop the flood, what did they do? They just sold off their holdings after a sharp drop. After the market rebounded, though, they blew up their retirement funds. What happened is so evident, it's awful. How afraid everyone was during that ordeal is something I will never forget. Review the S&P 500 and the market's ascent during the subsequent 15 years. Absolutely not. They also said that the market dropped sharply in 2011 after Standard & Poor's downgraded the U.S. credit rating, but that it bounced back fast. Nonetheless, the drop was not as bad as it seemed. But that was just another awful thing that happened. Along with the price, it fell. Where do the Olympians stand? Yes, I'm also anxious. Selling all I own at a discount will help me save for retirement, which I have been avoiding spending for years out of concern that it will go even lower. But what happened after that? The benefits are ever increasing. As a result, I feel that the best way to invest, particularly with XRP, is to think about the big picture, have faith in the basics, and hold out hope that they will be important more in the future. Tell me what scares you. You have already invested that money, and you don't need it right now. That is why I have never let a market slump deter me. My investment of funds is wholly superfluous. In principle, I would be upset to lose all that it stood for. I have a separate retirement fund in case all my crypto escapades here turn out to be a bust. Sure, I can definitely make that happen. I am able to relax because I do not require the money right away, and I am confident in their ability to grow in value. The fact that I have other ways to get money and that I am not in immediate need of it makes no difference whatsoever. People deny this and allow themselves to be terrified as a result. The stock market in the United States dropped by over 5% in June 2016. A startling 3-day recovery followed the Brexit referendum, which took place 2 days thereafter. The fact that it sometimes takes less than a minute with crypto makes that 5% seem comical. No more than 5%. Nevertheless, while talking about it's like totally disorganized to put 5% into more traditional investing throughout that time. At first, I mistook it for blood on the streets. Then there's this one. US-China trade tensions and fears of a Federal Reserve policy blunder caused the S&P 500 to drop by over 10% in the fourth quarter of 2018. Plus, that doesn't even consider how glaring it is on the graph. After this, as a result of the most spectacular occurrence in recent years, the worldwide pandemic of COVID-19, the S&P 500 dropped by over 20% in the weeks preceding it. They were scared to lose any more money because interacting with too many customers caused them to lose a large amount. They closed the deal at that location because of this. It then seemed to have materialized again out of thin air. Whenever public unrest occurs, it is time to buy something. Still, another, broader argument exists. That is, in fact, an essential concept. But I'm not going back on my word about what I want. What I said before in the video. Do not worry too much about trying to time the market, that is not important. Either you'll be able to see XRP's price spike and record high in the future, or you won't. I will be in continual communication with my XRP because I am the most uncompromising person you have ever encountered. That is simply the way it is. Nobody is more stubborn than I am when it concerns my money investments. The top banner and headline were written by them. Stay engaged. You don't understand, then. Is when the market is doing very well. Now we reach the most important part of the video. The fact that you've stuck with it up until now is a relief. They show it here. Imagine investing $10,000 in the S&P 500 and seeing how your tariffs could shift. If we could go back in time to 2007, what would $10,000 be worth in 2022? I'm just curious. Here we are discussing traditional finance, so I understand that the percentage growth won't appear as amazing, exciting, and appealing as Bitcoin. The bucks and the figures will be meaningless in the end. The concept is what matters. No amount of knowledge about Bitcoin theory, XRP, or any other cryptocurrency is more important than the idea itself. Why? Because when you buy and trade, you're interacting with individuals who share your genes. That is the cause of the same behaviors. It has become so overdone due to the crypto industry's obsession with it. Worse yet, there is an extreme scarcity of market liquidity. Huge swings can be caused by a relatively little sum of money entering the system. The attractiveness of cryptocurrency markets, to be very honest, is based on their intrinsic volatility. Here, after 15 years, you would have $35,461 if you had put $10,000 in at the end of 2007. That amounts to 8.81% annually. A pitiful 8.81% is still better than nothing in the crypto world. In spite of all those setbacks, I must tell you about the destruction and panic selling that has taken place. It bears adding that you had intended to invest that $10,000 prior to the 2008 financial crisis. Even after taking into consideration all the future classes, you would still come out ahead if you invested the $10,000 to $35,461 before that huge fall. Yes, I see. But suppose you were only gone for 15 of those years. Consider for a second the possibility that you were not one of the top 10 days. To get the total number of days, multiply 365 by about 15, leaving out the leap year. However, isn't that a significant number of days? Just in case you forgot which 10 days were the most fun, so a $10,000 investment would only yield $16,246 rather than $35,461 and a mere 3.29% return on a yearly basis. That is, if the 10 best days slipped your mind. Because of this, I try not to get into and out of poses too much. On every single one of my purchases, I appear to either totally right or totally wrong. Indeed, that is all. I have used that tactic for almost 6 years now. Because of that, I am extremely energized. For my part, I've reached my limit for the duration. During the first 3 years, I was really down in the dumps. Following that, a new market cycle emerged, which was quite different from the one that had initially appeared so promising. In addition, the majority of my investments have suffered heavy losses over the previous 3 years. I was in a dire financial situation until lately, when the market started its bull phase. Whatever the case may be, I know many people who have been depressed for a long time. But if you can manage to hold on for a bit longer, you'll see that it's not the case. After then, you'll notice this. When compared to, instance, 15 years worth of days, missing out on the top 20 days doesn't amount to much. You're not really sacrificing much time. But what if you don't get exposed? Your $10,000 is now only $9,740, and you're genuinely in the hole at that point. The reason behind this is that, in the majority of cases, investing involves enduring months of stagnant or decreasing prices, with a few, highly rewarding days when the wait is worthwhile. If you don't use the 30 best days, your $10,000 will be worth only $6,399 at most. The work is finished. Your yearly reduction rate would be 3%. If you can't make it to all 30, at least you got to experience the best days. What did you long for most when you reflected on your 40 best days? When you invest $10,000, you'd end up with $4,401. Well, I was here practically the entire time, would be your response. Ah, I get it. Restate it for me. Did you exchange positions on days that mattered the most? Part of your $10,000 will be $4,401. Falling by 5.32% each annum. That is really ridiculous. That is why I have decided not to take part in this game. For some reason, this is stuff that people have a hard time grasping. On the other hand, this is the main reason I am able to maintain my composure and not fidget. Neither a genius nor a wizard are adjectives that describe me. I don't pretend to have any knowledge about money. A total dimwit, just like the rest of them. For that reason, I tend to keep my distance. I am completely inactive. The rationale behind. People fail in this regard. To a certain degree, even they betray themselves. How come individuals behave the way they do? The problem frequently stems from someone's emotions. The "I can't wait" or "things are falling, they're likely to fall even lower" variant is this. I'll just buy it when the price drops. Well, I hope you succeed. After all, it only takes a few tries to get it perfect. In a row, and then the 10th time, if you don't, maybe you'll lose everything and then it's no longer worth it. Is putting yourself through that much stress worth it when you're already not feeling well? In contrast, the set it and forget it approach is one that I frequently employ. To put it plainly, that is the current gold standard. So, when XRP finally runs and hits a new all-time high, I plan to buy some. Why? Why? Because I persisted through thick and thin, the good times and the terrible. At my place, $25 is the going rate for XRP. 10 or 11 cents was the lowest I could get it to. It did catch my eye at $2. After that, from this point on, I took note of it for 16 cents. If you aren't aware with the background, it can be quite unpredictable. Neither the 0-day nor the new all-time high prices of XRP can provide any evidence that my investing thesis is correct. Nonetheless, something will come to pass in the end. Furthermore, you know just where my bet is. My expertise does not lie with financial advisors. Listen, I'm not saying you should go ahead and spoil yourself simply because I say so. Support my channel by giving it a like and subscribing. Catch you later, farewell.